How a simple weekly report could double your win rate. I am Jules, welcome to the channel. I have been trading for more than 5 years, currently funded with FTMO and CFT, and I enjoy helping other traders become successful and funded. Now in this video you'll learn everything you need to know about the COT data and how you can use it as an indicator. I can guarantee that this will give you the extra push and the missing piece you have been looking for. 3 questions we have to answer. First question, where does it come from and where can we find it? Where does it come from? It comes from the CFTC. It's an independent agency of the US government. Alright, and how we can find the COT report is through their website. So let me show you where and how. So where to find it? We have to go to the CFTC website right here, and it's the first one. Then we're gonna go to market data, commitment of traders. Over here you can find all the reports. We do not need to worry about those. Okay, we are only gonna look at the futures, and you do not want to look at the long format. You want to look at the short format. So basically I'm not gonna enter right away because I want to explain to you first who is involved in the COT report, and then we're gonna enter and see each category on its own. But by then you'll understand who is each category we are talking about. So who are reporting in the COT report? This is question number 2. And the key positions are, first we have the commercial traders, the hedgers. We have the non-commercial traders, the large speculators, and third we have the non-reportable positions, small speculators. Basically everybody who trades 100 contract plus has to report their positions. This is why we see the commercial traders and the non-commercial traders. The non-reportables are not reporting their positions. So how do we calculate those net positions? This is what I'm going to show you right now. So basically when they are reporting their positions, it's either long or short on a specific asset. So for example, if we have 80,000 contracts long on euro, and we have 20,000 contracts short on euro, we calculate long minus short and we're gonna get the net positions, which means in our example it's 60,000. okay, this is calculated for the commercials. And then we have also for the large speculators, again we also calculate the same way and we get the net positions. Now how do we get for the small speculators, which the retailers, which is us? We usually, the positions that are left and we do not know for who are those are usually the retailers. Okay, why am I telling you this is because now when we open the report I want you to understand what is the commercials, what is the large speculators, and how the retailers are also calculated. So we move on. As I mentioned, it's calculated for each trader category, and the non-reportable positions, small speculators, is always the ones that are left. Now who falls into each category? When we say commercials, who are the commercials? When we say large speculators, what do I mean by large speculators? And this is what we're gonna dive into now. It's gonna take 2 more minutes before I go into the indicators and show you everything. Now the first one is the commercials. The commercial traders are basically the hedgers, and I'm gonna tell you why they are hedging. They use futures to hedge risks in their business operations. And typical reporters are the producers, farmers. So basically, for example, if you are trading agricultural like coffee, soybeans, they are usually trying to keep the price balanced because they buy when it's extremely low, they sell when it's extremely high, right? They are always, we can see them when the price is extremely high, they're going the opposite. When extremely low, they're going the opposite. Okay, so they are always hedging their positions. And some examples are airlines hedging fuel cost, which makes total sense, right? Food manufacturers, grain, elevators operators. So this is what you have to keep in mind, that commercials are hedgers. They are the one actually using this asset that we are trading. Now, the non-commercial traders, those are the ones that are actually using the futures to make money, right? For investment, speculation, not for hedging, right? Speculation means trading. And typical reporters are like hedge funds, commodity trading, institutional investors, large individual traders. So we are not trading 100 contract plus, we are not part of this. We are part of the small speculators because we are less than 100 contract plus, which is us right here. Traders whose positions are below the CFTC reporting levels, small individual traders, small hedge funds, and retail investors. Okay, and now I'm gonna show you the report and you're gonna see each category we were talking about right now. So this is the CFTC website, like we spoke before, how we got here, and which one should we choose from here. If we look here, we have Chicago Board of Trade, Chicago Mercantile Exchange. Now what does this means? And let me give you a little perspective. If we come here and put NQ, right? Look here, we have CME. Okay, so CME is basically Chicago Mercantile Exchange. If we, for example, if we put gold, it's COMEX. So it's different. We won't find it in the CME. Now we go to the short format, and this is how the report looks like, right? So we have the Euro short right here. We have let's see, these are, we don't trade this, Canadian dollar, Swiss franc. And now what I was explaining, the non-commercials, commercials, and the total. This is the long positions and these are the short positions. So we can see that the retailers are very bearish. If we calculate those, you can see that the short is much more than the long positions. This is why we are seeing CAD go higher right now, and I'm gonna show you this on the indicator in a bit. The commercials are extremely bullish. Look, this is the difference, right? And this is the total between them. The ones that are left are the retailers, which looks here that they are short as well. So short, commercials are long. And usually, always the retailers are wrong and the non-commercials are wrong. So the commercials are the right ones, which makes total sense now that Canadian dollar would go higher. What are the limitations here is that we cannot see their past behaviors because we are just seeing this report. We can see all the reports, but imagine you need to go and see each report by its own in order to know their positions. Like, this is gonna be so much work, so complicated. That's why we have it as an indicator. And in the indicator we have couple rules that we follow. Now if you want to get access to those indicators, join my community. It's totally free. We do weekly webinars. I have classes on the COT report, how to use it with rules, how to know the bias from it. I'm gonna give you one example right here, but in the course I have multiple examples and the rules we follow in order to determine the bias. It's totally free. You have nothing to lose. The link is in the bio. Also, if you are finding value or you're enjoying this video, please subscribe and like. It will help me to give you more content like this. And now I'm gonna show you what does it look like as an indicator. This is okay, perfect. This is Canadian dollar, and look at the commercials, how bullish they are. Look at the retailers, they are not that bearish, but the large speculators are very bearish. And what we need to do is compare this to previous behavior. So when have they ever been this bullish? So this is happening right now, and you are seeing it as a signal as well, because look at the Canadian dollar. It's just started its move. This is weekly, so this is significant on the daily. It's just started its move, and I don't think it's gonna stop. Look at the COT, what is telling us. Just keep in mind, the COT is never to be used alone. You have to put more tools, more indicators, technical analysis, many more stuff into it to make it a complete trading strategy. It's not to be used alone. If we go backwards and we check, when have they ever reached this high? And as it looks like so far, like until 2014, they have never been this bullish and the speculators have never been this bearish. So this is a very significant move. This is extreme positions, okay? I'm gonna show you one more example. This is the net, the one we spoke about. while here we have the index. It's basically the same but in percentage wise. And look at the retailers, they are very bearish, the specular spec very bearish, and the commercials very bullish. If we press on this, it shows us 26 weeks, but if we want to see over 3 years, we can do that and we can see how bearish they are. This is more significant when it's on the 156, 152. Yeah, this is the commercials, same as the retailers. If you want to get access for all these indicators and all these charts, and I explain in the community what is the difference between unadjusted and adjusted charts. It could be super different. So for example, and here I go to Canadian dollar. You can see a difference in the chart. Okay, look here, we went below it. I'm not sure now what we're gonna see here. I did not see this before, but let's see here. And over here we did not go below it, right? And this is significant basically, because here it held, and over here it looks in the adjusted charts, it looks like it didn't hold and went below it. This is why the chart that you are analyzing on is very important. It's also very important for the, if you have another indicators like I do, for the calculations, right? The COT doesn't really matter because we are getting data from outside, not from the chart, and we are just putting it here for our simplicity. But if we are calculating from price, then it's very significant. So I'm gonna give you one more example, which is Australian dollar, that happened 2 weeks ago. We also had extreme positions from the commercials and the retailers, and it was also confirmed by the technicals. Look at this, we are reaching a weekly, I can call it supply resistance, order box, you can call it whatever you want. We reached this area, and look at the significant move. But when we reached it, we had the commercials very bearish, we had the retailers very bullish, and the large speculator very bullish. And we always do the opposite of the retailers and the large speculators, and we go with the commercials. Look at here again. If we look at the retailers and the commercials, when we were right here, the retailers were very bullish. Over here, when they were not this bullish and we saw the move. Over here, they were not this bullish and we saw the move. So if we go backwards, this is where they were bullish the same way, and look at the bearish move, right? Over here, the same. As well as the commercials were very bearish. So if we come here and check what happened with the commercials, were very bearish. Let's check it like that. Again, they are hedgers. This is very important to understand. We are going higher and they are going lower, right? And then when we reached this area, we saw this spike here for the retailers, and this is the bearish move, and we also went a big downward move. Now this is great to determine the bias, the trends, the reversals. If you know the bias, you basically remove 50% of the work. I have rules for everything. I have rules for this, and I have other tools that we use, like the seasonal cycles. I have another video explaining that. You can watch it right here.